Good morning, everyone. It is Tuesday, January 18th, and this is Morning Market Movers, where we look at hot spots in the markets and do some live analysis for day trading. My name is Todd Rich. I'm with Nadex. With me, Brian Caprice from Keep Trading Simple. And we do have some things moving around this morning. Just had an economic number come out, the New York Manufacturing Index. They call it the Empire State Manufacturing Index. We're seeing some fairly significant moves in gold and silver. So we're definitely going to take a peek at that. Oil also hot in the markets, punching up near highs we haven't seen since 2014. Equities all looking to be in the red, somewhere between 1 and 1.5%. So we've got a bit going on this morning. Before I jump into it and Brian and I start taking a look at these things, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So first, I did mention, I want to kind of show this to you. We've got this crazy spike in silver. We're seeing it trying to pull back just a tiny little bit. But yeah, short duration binary options. This would have been an interesting way to play this. Economic number that came out this morning surprised everyone. I'll let Brian go through the actual number, but it came out in the red when we were expecting a green. Just a quick peek too. I mean, look at the crazy things going on in gold. I think we're gonna have to talk about this one too, Brian, because that's goofy. There's no question something strange happened in there. All right, actually, I'm just going to flip it over to you. Let's talk about the New York number. Let's talk about what happened in gold and silver, and then let's take a look at some levels, what we might want to be looking at, and then oil and the equities are certainly going to be top of mind for everyone today.
Yeah, I guess we'll start with gold and silver first, and then there was actually just a release that just minutes ago came out, which is the largest deal in the sector. So I'll kind of explain what that looks like. It's January, so you're going to start seeing these things, which will probably lead to some movement in the overall indices as well because of the size of the deal. But anyway, Empire State Manufacturing, it's a survey. It's sent out to 200 manufacturers. Why this number? And you may say, oh, is that a big one? Not really. It tends not to be that huge of a release. It's considered a medium, and it fluctuates back and forth between a medium and a low release. The reason why it's causing such big drama right now is because almost kind of the bad is good, right? It was expected to be 25, a little bit less than what it was before. And this is one of those indexes that uses dollar, the 0.0 mark, as whether it's basically improving. Some of the other releases, it's 60 is the number, but over here it's zero flat. Above indicates improving conditions, below means worsening conditions. It was expected to be lower, but still on the positive side of things. Maybe good, but not quite as good as they were. It actually came in as negative. So this was an absolutely huge. And you can see, a normal miss in this one is where it is expected to be 24.9, comes at 19.8. Or like 28 to 8. You're like, wow, that's a big miss. Or 18 to 34. It's like, wow, everything is so much better, but still on the positive side. You don't see negative numbers in here too often. In fact, even going through all of October 22, the last time we saw anything negative was May of 2020. April, May, March, basically COVID, when everything was starting to lock down again. Since that time, it's been positive. So it's not a number that really kind of we see often in the negative, and that's not how you want to start off your first trading day. Now, I'm going to bring this down to a 5-minute chart. We brought this up before. A lot of times we talk about when we're trading things like oil or any type of news releases, we talk about that 35 and 1 and kind of seeing where prices push themselves beforehand. And I always get questions about it. I get emails and people are like, what do you mean? What do you mean the market moves it before it happens? I would love to say that everybody finds out this data at exactly the same point. Like they're sitting there, like all the experts are sitting here clicking refresh right here. And we get it within seconds of 8:30. Well, the reality is if you look at this, magically, it's done nothing for 2 days, for a while. I mean, really, it's been very, very, you see this. This is all wicks, and this is a 5-minute chart. But even last week, all wicks, even in prime hours, all wicks. Magically today, 30 minutes before the release comes out, it is the strongest 6 candles that we've seen in the last 2 months. Right, 30 minutes before the news comes out. And then magically, it stops at 8:20. And then right there, it does nothing at 8:25. And then all of a sudden the number comes out and it skyrockets itself back past again. So we talk about getting things on sale, right? This is that perfect example for gold. And again, we talked about 35 and 1 where it stalls. There's your stall. Okay, so it doesn't matter the release. This is what happens when people are able to see the data ahead of time. Now, overall, I'm going to bring it back up to the 30-minute. And again, it is a big spiker. There was actually, there was a Harry Potter level that we talked about, a break of 113 last week. And again, we kept hitting the area, but no real clean entries. This morning, when you're looking for basing here, we had basing actually this morning, and there was actually an entry on this one. Actually taking advantage of that news at 7:30 this morning, there was actually two different trades. There was the one here, but again, if you waited for it to bounce back, it did hit and come down and go to its full profit target kind of twice this morning of a break of that 1816. Now we're driving higher, and I would say overall, I'd actually be looking for more of a reversal. This is a very, very big move. It was obviously in a low volume time. It's obviously more of a manipulated number.
Right.
I'd be looking for this one to kind of pop back down again. Because like I said, the reality is, oh my God, the economy is worsening. This means they're not raising interest rates. That means that gold and silver are going to have an opportunity to gain more ground with inflation increasing. The problem is we're at a 40-year high on inflation. They're not going to let it go that much farther. They can't, because there are other things that cause problems when the inflation is this high. So while right now it looks like it's absolutely amazing data for gold and even silver. Silver, gold's up basically 0.03. It's 0.02,
Yeah,
0.01. It's kind of hovering. It's kind of flat. The pop has already happened. So for people to jump into it now on the long side, typically not the best. I'd be looking for this confirmation down. And silver's the same thing. I mean,
silver didn't get that crazy. I mean, there wasn't. I mean, there was a little bit of a move down right before the number. A little bit.
Here's the move right here. And again, it stalled, and this is the 8 o'clock candle here. It did drive down. It only had one stall candle at 8:20 and then took off a little bit ahead of time, right? But you're already seeing on the 5-minute, you're starting to see kind of tops put in, right? Lower lows, you're seeing lower highs. And again, this is a parabolic retracement move. We've seen this in the past. I mean, it happens all the time. Now, the cool thing about this and why I do like it is all these other levels. Like this level kind of got, it hit and it started the base. Again, we thought this one was going to fail, and it did. We were looking for it to break down, and it did push all the way back down again. When it finally got the entry last week, it did. It came back up, base came up and went down and ended up hitting the profit target. We had another level here. And again, this level had been touched here and here. The nice thing is that it sliced through. So what it does for us is it actually cleans up a lot of the analysis. We can take it from last week and remove this. This short was good. This was good. This was a level. This level is still good down here. This is where our short targets were too. So again, we've just been able to kind of clean up our silver chart, saying that, hey, listen, 2362 is in a level where there's a potential reversal. On a 30-minute, it's still trying. And again, there will be retail buyers that get into this thing, right, in the next 30 minutes. They come up in here and start buying this on this parabolic move. Again, that leads us back to the downside. Worsening economic conditions is not fixing inflation. Even if inflation didn't rise at all any more than it is right now, we're still at a 40-year high. So it still kind of needs to be pushed back.
Just to put everything in perspective, because obviously silver and gold taken off because people thinking, hey, they're not going to raise interest rates, this horrible manufacturing index number, but we do have inflation. And let's take a peek at what's going on at oil, because we're hitting highs we haven't seen since 2014.
Yeah,
we punched through $85 earlier today. We're back. I mean, we're right there.
Yeah, we had that one small level up there sitting at what, 84.60. We mentioned it last week, and that's kind of where we ended the week. We opened up in that level, and again, great short down to 83.50. That was what, $1.10 move to the downside, and then it rallied its way back up again. And again, with the hits in here, you expected it, and you guys know what this pattern is, where it comes up at bases, it hits it and goes higher. Again, it's a Harry Potter trade right off the top of that zone. And again, valid zone. We were looking for the short from it. It opened there, and I mentioned opening on the weekend, and then great short. And now it has gone back up again and has pushed the other side. And the next time we had sellers was really 86.21. So this number obviously is not as affected by Empire State Manufacturing, but it's kind of the same thing. That this was the driver. Last week we saw that oil is no longer the driver of inflation. That the energies, when they removed that out again, actually when you included it, it was higher, but when you pull them out, it was basically flat. So again, it was basically showing that the energy inflation that was driving all of it is gone now. So we're not seeing it to the same extent anymore. So, this rallying back up again is this is OPEC messing with the supply and demand of things. There
are some things going on in the Middle East too. There was some activity going on. People expecting some potential disruptions, or so.
Yeah. So, I would say, and again, looking at the European session, analyzing what we've seen right now, right here, the high of the morning was right when the Europeans came online. So, I mean, this is what we're looking at for the European session. And can you say, are we really pushed in one direction? I'd say, if anything, the Europeans pushed it more down. And then when the U.S. started to come along, we went higher. typically when we see a European pressure down, especially into a level of buyers, and again, you can use the old level that we sliced through, or you can draw the new one right here. Either way, it really doesn't matter. I would say right now it's probably looking for more of like a long type scenario today. I mean, that tends to be what we see when the Europeans push it down, especially into a level of buyers. Because remember, the U.S. is definitely more of the pro kind of oil prices up, country. So I'd say if we really start testing at 86.21 today, it wouldn't necessarily be surprised with everything we've seen going on.
All right, so let's now. By the way, just in case everyone's on, where I did drop in a link to Nadex webinars, the top webinar, a full-blown session today in 3 hours at noon Eastern. Going to be going through all the markets after we've seen what's happened on the open. All right, just wanted to point that out. Now let's go ahead and punch over and take a look at these equities, because we've got equities all looking to open in the red.
The VIX is up 13%. 13.3% is not really how you want to start off your first trading day of the week. That pretty much tells you what it's going to look like across the board. There were some big numbers out there, and again, we had another one of the financial services, Goldman Sachs, actually. Let's see where I have it over here. Goldman Sachs actually came out with their numbers and earnings, and they were lower. And it's a very interesting article. I recommend that everybody goes and looks it up. It's on Reuters, but I wanted to read you something. And we always talk about, what's happening in the markets and what's good and what's bad in the markets. And I feel like this is important. It talked about how I had lower profit in the quarter ending December 31st compared to last year. And the reason why, actually, hold on. Profits fell 13% and missed market expectations on Tuesday as weak trading activity dampened the bump year for deals. Yeah. The reason why was because of a more stable economy resulted in less volatility and fewer swings in financial markets. They still made $4 billion. It's down 7%. But think about that statement. The reason they didn't make as much is because there was less volatility and fewer swings in the market.
So what do they want? They want more volatility and more swings in the markets.
They want craziness. The more crazy the markets are, the more money they make. I mean, it wasn't like they had a bad year. They made $4 billion. Like, think about what we could do in the United States with $4 billion. Like, if we, it's unbelievable. But yeah, they were down 7% because there was less volatility last year because of everything going on. And again, a lot of that less volatility and chaos is because, again, we were recovering from kind of the huge COVID drop. So that helps. But isn't that amazing? Yeah, we didn't make as much last year. It wasn't as volatile as we had liked. The other big news this morning, which will also help, and again, that's Goldman's. That's going to kind of affect the overall market. When people see banks not making money, they're like, wait, they're not making as much money? I mean, $4 billion profit is kind of not anything to scoff at. But the other big thing that just came out minutes ago was Microsoft. Microsoft obviously affects NQ. It's one of the big tech names. It's in there with Apple and Tesla, maybe not as controlling anymore. But they just had a $68.7 billion in cash deal to buy Activision Blizzard. If you guys don't know who Activision Blizzard is, names like World of Warcraft, Call of Duty, Diablo, and Overwatch, some of the biggest names out there, they bring in tons and tons of money. Microsoft just purchased them in cash. So that is a big deal. And again, Microsoft stock will be reacting with it today. So that's a big one over there. And again, everybody knows esports.
Oh, yeah. You might. Do you have the... Do you think you might want to have the Nasdaq up? I don't. You're looking still at a chart of
right now. Yeah, I can bring it right here.
Oh, there we go.
It's not showing yet because again, the market's not really open yet, so we're not seeing any movement. But again, Europeans have done nothing but send it straight down. If we look from last night, actually, the European market opened here for NQ. NQ is the weakest across the board, down at 1.43%. But they're all pretty much the same. I mean, NQ is down about double. ES is down 0.9. YM is 0.8%. Russell was 0.8%. So everybody's pushing back to the downside. Whoops, I didn't want to move that one. Again, and it's funny. It's literally bouncing off all these levels. I did get an email last week about what were all the dotted lines on these. Like, why does this look busier? These are all the round numbers, guys. And again, you're seeing it based here, came down and based on that one, came down and based on this one. The next one to the downside would be the 15,200, followed by the 15,100 lower. So these are just big psychological levels. There's no mass. This is no like crazy indicator. Literally, I'm drawing horizontal lines when it ends in a double zero. It's called like the whole numbers theory, or the round number theory. I guess there's many different names for it. It's a Russian mathematician did this. The quarters theory, I guess is what it's called. I would say NQ would definitely be one to watch today. There's a lot going on involved with that. YM as well, I think, is also important. You're seeing YM is hitting a level, although this is the fourth hit. So, I mean, we had our 1 hit, 2 hits, 3 hits. We are 4, so this could be the breaker. And it does look like we are in a bit of a racetrack down to potentially 35, 323. So there's plenty of room in this one. I would say if there's any type of and again, I'm gonna shrink this down. Let me bring this to here, drop it to a 15, and see if I have a level of basing. I do kind of have a level of basing in there. Looks like if we use this level right here, again, if we get any spacing, we have plenty of room to run to the downside. Actually, maybe a little bit of a hiccup down here at about the 2.5 to 1, but easily you can see that there has been a base here, and the opening sentiment is like, yeah, this is a down base trade. So, and 3 to 1 is right there. So, YM because manufacturing, again, if manufacturing numbers tend to affect the YM the most. It's doing okay right now, but again, if there's worsening economic conditions, that will eventually affect the industrials over here. So
It
YM,
is rather interesting that gold and silver did what they did, but the Dow, it's certainly not good. I mean, the Dow's
well,
down, but it's
yeah.
not like the rest of the market, which is just kind of ironic. It's like the
It's
reactions
easy.
are very
Here's why.
divergent.
Gold and silver is not something that the average Joe is trading. That is a futures trader that is not looking at market hours. Remember, the YM is predominantly driven by retail traders trading stocks and bond, basically stocks, mutual funds, ETFs. They haven't gotten into the market yet, so they're not actually in there. This is pre-positioning the market later today. Where gold and silver, the average Joe is not going out there and trading gold, gold futures contracts or silver futures contracts. So a little bit different of a market. Wall Street's absolutely open, but the retail trader is not looking at those two yet. But the retail trader will see silver up, 2.2% and be like, man, I got to get long. This is the place to be
Here
today,
we
right?
go. Yeah, to
And
the
that's
moon.
where the reversals come in. So understand a lot of it is you got to think about who's on the other side of your trade. Who's the person moving and trading that market right now? Right now, the retail trader's not in. That's where all the sheep are coming in pretty soon. So, be ready for that open today. I think it's going to be exciting.
All right. So, all right, there we go. With that, any questions for Nadex, please email us, customerservice@nadex.com. Questions for Brian, support@keeptradingsimple.com. I've dropped my email in there as well. Currently my IG email. Hopefully that'll change to crypto.com sooner rather than later once the deal closes. What did we cover today? There is a lot going on in the markets. We had that Empire State, the New York Manufacturing Index came in way lower than expected. Saw that spike in gold and silver. Gold trade was rather interesting with it moving right before the number. Oil up near highs. I mean, we're punching up at $85 a barrel, highs we haven't seen in years. Highs we haven't seen in years. And then the equities all looking to be soft this morning, being led by tech. It is interesting. We are in earnings season. We know the banks. Goldman was the latest one. Trading activity last year wasn't all that great. They're still making a lot of money. They're just not making as much.
Yeah,
they're
it's only
just
$4
not
billion
making.
this year.
They're not making as
Trading in it.
much. But we will have earnings seasons in high gear, so we're going to continue to see how the economy is for other sectors. So we'll certainly be covering that the balance of the week. Brian and I will catch you again. Well, first, hopefully you register and join again in a few hours. Brian's going to do an entire rundown at noon Eastern on everything, and that'll incorporate whatever happened on the open and then setups for the balance of the week. So please register there. Otherwise, we will catch you again tomorrow morning. Good luck in the markets, everyone. Thanks for joining us.